Now, it's difficult to convince an investor to put that money if they've lost money. The biggest risk isn't buying the wrong property, it's buying the right property with the wrong assumption. The more information you know, the more you can navigate all these issues. One of the reasons why I decided to do this thing I'm doing, it doesn't benefit me. Most of you are not my investors. Or some of you got to know me, started joining this after you've invested. So in quotes, it's not because I'm doing this you invested with me, because maybe you'd have invested with me before now or invested through someone on my team before now. So my point is, there's no direct benefits at this point, maybe in the future, but right now, there's no direct benefit. But one of the reasons why sincerely I'm doing this, apart from personal reasons that I really want to give back, is because some sponsors are taking some new people for granted, and it's creating a ripple effect and is making investors run away from investing. Now, it's difficult to convince an investor to put that money if they've lost money, and we are seeing that many people have lost money. One of my friends called me and she was literally crying. She's a veteran. She took all her retirement money, and she invested in that deal, only for her to find out that it's approaching foreclosure. She was like, "Really, what can I do? Well, what's the loophole?" She was like, "This is my life. What will I do? This is all I've worked for. Everything is gone." I felt pity for her. I kept saying, I'm sorry. And one thing I said to her, I remember when you were going into this deal, I gave you my deal and you said no. And I saw you go there. But I didn't want to spoil things for you because I know how those people are. But you went there and see where it is now. My point is, so many of the people in this, they are out there to take advantage of people, and there's no empathy around it. That's even the worst. Some of them, they know it, or they claim they know it, and they get investors' money and they get to lose it. So I'm doing this thing to kind of open your eyes to say what is happening, so that regardless of whoever you want to invest with, you don't have to invest with me. There's something that God has always done for me. He's always giving me the right people that will help me. I don't know how to raise money, but I always have good people that are my team members that will help me raise. So regardless, this has nothing to do with me asking you to join my deal. Put that aside. Do whatever it is you want to do with the information I'm giving to you. But my point is that I'm seeing here and now that people are being taken advantage of right there. Even as at December, there's a very big group. I'm not going to mention any name. Recently, I heard that one or two of their deals have been foreclosed. One is approaching that. And only for me to see them posting a deal on different WhatsApp groups, I was looking at it. I was like, oh my God, you just lost some people's money and you have the mind to get another set of investors to come and invest with you. That is awful. And these things are there, but we can't start mentioning names because we don't also want to create some kind of crisis and all that. I'm saying it, but not telling you their names. I don't want to do that. But my point is, be careful. The more information you know, the more you can navigate all these issues. I'm not saying that my deals might not fail or you've done your part and things might not happen. Things happen in deals. Things will always happen. But as long as the fundamentals are right, you will be fine. You might not be as fine as you should have expected it, but the long and short is that you'll be fine. So if you have all this information and know that this and this and this are likely to happen, you will not invest wrongly next time. Before someone will get your money from you, you ask the right questions. And it's either a yes or a no, and you walk out because you will be looking at it from a different eye. So that is one of the things that is making us do this. I have my virtual assistant here. She's paid per hour. You guys are not paying for this, but I'm paying her to be on this call to help me navigate the entire thing. Because last time I was frustrated, if for now is taking a back seat. So it's not easy for me to be talking and be bringing people in. So I had to ask her to come. So please, guys, all this information that you're being given is for you to use for your person. Know that the more knowledge you have about this, the more you'll be able to navigate issues. We also go through our challenges. One of the challenges we went through last year was a deal that everything was perfect. Darren, you're on that deal. You, me, and Bushan, we went through the underwriting for 5 months or more. From March to July, we were on that deal consistently. We were following the numbers one by one. Nothing should have gone wrong. Am I lying? No. Nothing should have gone wrong. But few days to closing, I spoke to the two of them. I was sending stuffs on the group because the three of us were in a group. I was saying to them, like, people, what's going on? And I said, hold on, we are seeing, first of all, I think it was you and Bushan that noticed that come on, there's something going on. We're seeing a lot of moving. There are really being a lot of moving. And when that report came to me, I was like, thank you, I'm going down. Immediately I called, I said, I want to see your rent through an audit. I want to do a new lease audit. They pushed back because it was not in the for us to audit twice. So we said, no, we don't have it. It's not in the PSA. You have to, we've done your lease audit at the beginning. You cannot do it. Look at us looking at the bad tenants, because from the beginning of the year, you were not able to bring in like 18 people. Well, in a space of 7 days, we brought in 18 people. That doesn't make sense. It means that means every time they can hire is coming. So all we knew was that that was trouble. And it happened few days to closing. Now, we went back to check what is the effect of that. So we still had our underwriting. I was literally adjusting the underwriting to see the effect of what that would look like. And thank God, because we had some wiggle rooms, it did not break the deal. But what he did was that the year one will suffer some cash flow losses just because of this. And guess what? We closed on the deal, and that's what we saw. All of the 18 people that came, we've evicted all of them. All of them are bad tenants. So this can happen that you might not kind of have control over, and you just have to find your way around it. It's not pretty, because the plan was enter the deal, stabilize the deal within max 4-5 months. We are done. Everything started running smoothly. But that's not the case. We're 5 months in and we are still stabilizing it. It looks like we can be stable in March. But that was not the plan. But overall, is it going to work out? Yes, it's going to work out. Now we're putting the right set of people. Our delinquency has gone down. As at last month, apart from some terrorists, I think that's a new word now we're hearing everywhere. Terrorists, yeah. So apart from those ones, we have like 4 of them. Apart from those 4 that are challenging, guess what our delinquency was? I think about $200, which has never been. So we are on the right track. My point is, things will always happen, regardless of the fact that you have experienced people or non-experienced people. But the more knowledge whoever is leading or the team have, the better it is for them to mitigate the risk, because the risk will always be there. That is it. Some you are used to, some that will just come up and you just have to brainstorm and get a solution. That's it. You just have to do that. So I'm going to wrap up here and ask anyone if they have any questions. So the core lesson is that the biggest risk isn't buying the wrong property, is buying the right property with the wrong assumption. That is the biggest risk. Buy a property with the wrong assumption or the wrong projection. That is it. I'll close by saying this. There's a deal I was chasing after we closed on the one we closed on last year, and I underwrote the deal and I took it to my property management, and we had a call, and we all noticed that the rent in that market was declining. And we also noticed that just right beside the property, there's a brand new property that is pretty. Yours is 1985. That one is 2024. If I'm a tenant, which one will I go to? I'll go to that one. The rent is cheaper, at least for now, and they're giving concessions. So I saw that averagely, apart from that effect, other things were affecting the market, and I walked away from it. And guess what? It was my lender that was selling that deal. And when I told him I'm walking away from it, he said, yeah, I know. I saw it. The rent is reducing. We saw it. But guess what? Someone that I expected, that I thought that would know, closed on the deal. I'm like, wow, didn't they see what we are saying? You know, hopefully maybe the market will help, but that's a risky approach. I don't know. So the more knowledge we have, the better the deals we are. So this year, we are going to go in with having the right understanding before we put down our ad-in money. The right understanding to this investment. Multifamily is a beautiful thing, especially when you have them in multiples. Imagine if you are in all my deals, and if you see when I'm giving out distributions or some fees, and you're seeing me giving them out on this property, on this property, on this property, on this property, all at once. Is it not sweet? It's nice. I've been doing that lately. You know, the more deals we close, the more my team are getting more distributions, right? So multifamily is sweet, especially if you have good properties that you can. That's why we can be passive investors and all that. I see your gift to the PM and stuff. Yes, it's just to encourage them, regardless whether they are doing well or not. They will fight your case. Do you know what that gift did? Let me tell you in quotes what that gift did. They had to go replace one of our properties with their best leasing amazing person. They could have done it, but they said, no, you have to get the right person here. They did that switch after the gift came. So the gift performed as it is. That's the point, So guys, does anybody have any question? Please, I have about 5 minutes. You can ask. Why didn't she invest with you? Some people go for the big name. Big Day is not a big name yet now. You understand? Some of them will never invest with me for some reasons. I don't want to mention those reasons, but if it's not people that look like this or do like this, they will not invest with that. So some are like that. I've seen that happen. I've seen people that want you to help them underwrite their deal, but once I approved it that the deal is good and I'm open to partnering with them, they come up with, oh, I have other people that will partner with me. And I'm like, okay, so I'm good to help you underwrite the deal, but I'm not good to enjoy the deal with you, right? So I see that with the kind of people that I know they will be like. So the thing is, not everybody's going to invest with you, not everybody would for different reasons. You can't control how people feel or what people want to do. But the point is, she didn't invest with me, and now she's saying that if she's able to save up, unless investment is with me. You don't have to go through experience to learn. And there's something that you need to know. I'm not going to go and spoil someone. You come and meet me, oh, I want to invest with this person. I won't tell you not to. I'll say, oh, nice. I will ask you to go on. That's it. I'm not going to tell you not to because I expect you to do your due diligence, So all other questions, if it's one of your deals, can I say no? Yes, you can say no to it. Of course, I have some of my team members that did not go with me on the next day. One, because they're tapped out from their investor base. They know they can't raise. I'm very strict. If you're my dear, I'm just like this. I'm very upfront. I don't mince my words. And the reason I do that is because I know the responsibility that this day cannot fail. So if you cannot do your job, don't expect me to be nice. I won't be nice at all. Because if anything happens, they're not going to ask you. They're going to ask who is the lead. Is the lead that's going to be in trouble? So if you cannot cope with the discipline or with the way I go about my deals, I'm sorry. It has worked for me, especially my property managers. Others have seen them now. The moment you take your hands off the pedal, they go and rest. So you constantly have to just put them on their feet, So you can decide to continually invest with me or not. It's up to you. But one thing I always guarantee all the people that are with me is that you always see cash flow. That one is sure. Does anybody have any question to ask? While we are waiting for that, for those of you that's not subscribed to our YouTube channel, go right ahead and subscribe to BBOFree on YouTube. Any question from anyone?
Yeah, I had one real quick as my phone is dying. But when it comes to the sensitivity analysis that you do, right? What are some of the key things that you look for, I'll say, outside of obviously, interest rates, vacancy, etc. If you can kind of expand a little bit on that.
I did ask the multifamily expert. I talked about it. So I look at the different, because it's divided into 3 major areas. One is the income area, the other one is the expense area, and the other one is the financing area. So I have to stress test, what if my property becomes unstable? At what point will it get to that I can't pay my bills any longer? So how do I stress test it or do the sensitivity analysis? I try to go around different numbers, random numbers, and see, okay, at what number my vacancy, at what point will my DSCR will be negative or 0 point something. So my point is, by the time I try to stress test 10%, I'm going to try a 5% vacancy rate. I'm going to try 10%. I'll try 15, and I'll keep looking to see what the effect of that is. Or if I have a vacancy of 15%, will it break the deal? 20%, will it break the deal? 25, let's assume I get to 25, and it's like, if I go to 26, the deal breaks. Then I know then that I must not allow my vacancy get up to 25%. So once I'm around 15%, I'm already sounding the alarm, because I know that 25% is going to affect my income. The same thing I'm going to do with my vacancy, I'm going to do with how bad can my delinquency be, okay? How much will people owe me? Or if they owe me this amount, how bad will it be before I start saying I can't pay my bills? Sometimes I do a combination of, okay, what if I have high vacancies and I have increased taxes? What do I do? How long do I have to make that work? So these are things I will do during that time. Let's assume I have vacancies. Okay, I have vacancies a lot. I'm going to have some reserve. I'm going to give myself that time to make that property stable. But within that time, I need to pay bills. So I'm going to make arrangement for reserve. There will be reserve somewhere. If you notice, I've been talking about reserve. It's for a reason. It's for any emergencies like this that can happen, because I know that if this property is at this point, it cannot pay certain number of things. Then I look at how long do I have before I'll be tapped out. So that's that one. And I also stress test my expenses. What if my expenses increase by 5%? What will that do? Then I start to say, okay, if I increase by 5%, my income, will it be able to offset it and still be able to pay my mortgage and give me some cash flow? Sometimes what it will do is to tell me that, oh, yes, your expenses has increased by 5%. Your income can pay for all your expenses and pay your mortgage, but nothing else. You cannot pay anything else. The next question I will want to be asking myself is, okay, how long will I sustain? How long will this go on before I start making little money, right? So those are some of the things I did, especially in this last one that we closed. When I saw that thing happen, I went back to check. I found out that our year one is going to be impacted significantly due to that effect. Because you might look at it, it's not 18 people. It's 18 plus the previous vacancies, because we had a vacancy of about 9%. So if you add all together, that's a significant number of vacancies. So what I went to do was to do a reforecast quickly and to adjust it to see the effect. The bottom line is I wanted to see at what point. So I saw that in year one, that's the effect. Year two, everything is fine. And because I understand that typically it takes 1 year for a property to be stable. Sometimes it happens before then, sometimes 1 year, sometimes a year and 18 months. That's the standard. There's nothing wrong with it, especially for days that have heavy value add. Those ones take longer time because you have to do a full renovation before you start putting in tenants. All these things will take time. So between the startup point and 18 months, there's nothing wrong about it. The only thing is that your investors need to be aware that that is what will happen, but it's not like from the beginning to the end of the deal. So you check for that. Then now the financing part, I'm going to do my stress test from the beginning, because I know that deals can fall apart some weeks to closing. I always make provision that if interest rate is 5, I will move my own to maybe 6.5 or 7 to accommodate for that window. And how I lock in that one to ensure that I'm fine is I make it fixed. But there's a type of loan I always use is that it's fixed but it's flexible for me to exit if I want to. So those are some of the loans I use. So that way, that one can help me stress test to see, okay, if I exit. Another thing I'll try to do is, what if the market is not favorable year 3? What will I do? I'll stress test year 4. I also stress test the exit strategy to know at what point I can exit and the alternatives and the effect on the returns. Is it going to affect my cash flow, or is it going to affect my IRR, or is it going to be in between? So by the time I stress test the exiting in 3 years versus exiting in 7 years, I also stress test what if I don't refinance, I sell off in 5 years. What would that look like? I also stress test, okay, what if the market is favorable in the 4th year and might not be favorable in the 6th year that I intend to exit? Okay, if I'm going to pay prepayment, would the prepayment I'm paying to the bank affect the returns for my investors? So it's a lot of numbers moving here and there that you're trying to understand the effect of that. Another major thing is I stress test cap rate, because cap rate can jump. That is market cap rate. That is one major factor. So I'm telling the investors that, okay, in 7 years, this property is going to appreciate by 7 million, right? So I'm going to look at a cap rate, let's say 7 million at 5.5. I'm going to look at a cap rate of 6.5. What if the cap rate goes extensively, very big? What happens? So that is why we always add 0.1 for every year so that it can accommodate any increase in cap rates. Sometimes, depending on the market, one of our markets added 0.15. That is almost 2%, because that market has a tendency of increasing cap rate very fast. It's a lot of stress. I won't lie to you. That's why my underwriting is in stages and it takes time. And that's why I cannot close in too many deals, because before you can see one that will pencil out all these things is hard. So stress testing is important, but it's a lot of process. And I don't know, I've not gone through all the underwriting tools. I use Microblank. Some of these underwriting tools are very stiff. You have to start recording them, putting in your formulas. If you know how to do Excel, you might be able to figure it out and all that. But if you don't, you'll be stuck. So some of these things you need to figure out how to use the software in sampling these things and all that. So yes, Darren, I know I went long, but I know you're expecting one short answer. It's not a short answer.
I never expect a short answer from you. So no, thank you for being so thorough that you will that you always are.
Yes. Thank you so much. So that is why it's important that you don't do multifamily alone. You have to partner with people to take leverage of their experience, their money, their time, because you can't have it all. I don't have it all. So I will not advise anyone to go and say you want to do multifamily alone. Don't. Me, I won't do it alone. So I respect you too. Thank you all for coming into this.